Good morning. Now, we will take up complete repossession. That means, when the hire purchaser is making any default, he is not making the payment in time. As we have already discussed earlier, the hire vendor has got the right to repossess the goods. It may be completely or in part. In the last class, we have already discussed how partial repossession will take place and how the entries in the books of the hire purchaser as well as in the books of the hire vendor will pass the entries. Today, first of all, we will be passing the entries in the books of the buyer or hire purchaser when there is complete repossession. Complete repossession, entries in the books of the hire purchaser. Entries in the books of the hire purchaser. Now, think that you are the hire purchaser, you are making some default, what entries will be passed. So, as usual, the entry for interest and depreciation will be passed. So, for interest, the entry will be interest account debited to hire vendor account. Similarly, for depreciation also you will pass the usual entry. For depreciation, when depreciation is charged, the entry will be depreciation account debited to asset account. This is the usual depreciation will be charging and passing the entry. Now, the payment should have been made, but we have defaulted and so there will be no entry for that payment. Bank account is not coming to picture. But as a matter of fact, the hire vendor is repossessing the goods. Complete repossession means all the goods he has given us, he is taking away. So, our complete asset is being taken away by him. So, what will be the entry? The buyer will have to close the account of the vendor by transferring his balance to asset account. It is the vendor's account which will be closed by transfer to asset account. It is not the asset account which will be closed by transfer to the vendor account. Please mark the difference between the two sentences. First of all, which account actually we are going to close? We are going to close the vendor's account, not the asset account. Although asset account will be closed later on, but first of all we have to close the vendor's account. Whatever amount was there, because he has already taken away the goods from us, the asset has been already taken over by him. So, there will be no relation, no balance, no future transactions. So, simply we will have to close his account. So, in order to close his account, to close hire vendor's account, hire vendor's account must be showing a credit balance. So, in order to close that, his account should be debited. So, hire vendor account debited to asset account. Whatever balance was there in the books of the hire vendor, now that has been debited, so it is closed. Now, when he takes over the asset, definitely there will be loss on default, and the loss will be transferred to profit and loss account. And here for loss on default, you have to pass one entry, you have to calculate the loss on default, that is the asset account, whatever balance it was showing after being transferred to a hire vendor account, still there must be some balance. So, that asset account will be created, for that amount asset account will be created, and profit and loss account will be debited, that is the loss. Profit and loss account debited to asset account. Because this entry is passed for the balancing figure of the asset, so asset account will be completely closed. Asset account will be closed by credited, because it is being credited, and the loss will go to the profit and loss account. So, these are the 4 entries in the books of the buyer, hire purchaser. So, let us come to the same example, or rather another example, simple example we will take, and in that how these entries will be passed and how the important ledger accounts will be prepared. X purchased a car from Y costing rupees 1,50,000. The cost of the car was 1,50,000. So, this was the cash price. Then payment was to be made 30,000 down and remainder in 3 equal installments together with interest at 5% per annum. So, first of all 30,000 rupees will be paid. This is the down payment. So, remaining balance is 1,20,000 divided by 4, because in 4 installments it will be paid, sorry 3 installments it will be paid, 3 equal installments. So, 3 equal installments of 1,20,000 divided by 3 is equal to 40,000 plus interest, whatever interest is due at the rate of 5% per annum. Depreciation will be calculated at 20% per annum on diminishing balance. X paid the first installment at the end of the first year, but could not pay the next. Just like the previous problem, here also the down payment has been made, first installment has been made, but second installment there is a default, it was not paid. Y took possession of the car, he spends 5,800 on the car and sold it for 80,000. That will do when the entries in the books of the hire vendor will be taken up. But here it is in the books of the hire purchaser, we are not interested for that, simply these entries will be passing. So, first of all, interest account debited to hire vendor how much? Out of rupees 1,50,000, down payment has been made 30,000. So, amount due at the beginning of the second year is 1,20,000 and whatever amount of interest was there that was given, and also 40,000 rupees first installment was given. So, the balance was 80,000 on the opening date of the defaulting year. So, that was 80,000. On 80,000 we will calculate interest at the rate of 5%, that is equal to 4,000. So, for interest entry we can have 4,000. Interest account debited to hire vendor account 4,000. Then depreciation account debited to asset account, how much? It was on diminishing balance. So, 1,50,000 minus 20% for the first year, which is equal to 30,000. So, 1,20,000 in the beginning of the second year. So, the depreciation again will be 20%, that is equal to 24,000. So, asset balance was 96,000. So, anyway, the depreciation was 24,000 in the second year. We have to pass that entry because it is in the second year, 24,000, 24,000. Then close the hire vendors account. What is the balance due to the hire vendor on that date? Out of 1,50,000, we have given 30,000. So, 1,20,000, again given 40,000 plus interest. So, 80,000 was due. And now, the interest for the second year is 4,000. In this way, 84,000 was due. Out of 84,000, 80,000 was the due plus 4,000 is the interest for the second year. In this way, total amount due was 84,000. So, here when he takes over the asset, it will be to close his account, we can write hire vendor account debited 84,000. So, that his credit balance of 84,000 has become 0, because we are debiting him with 84,000 to asset account 84,000. Now, what is our loss? Actually, the amount after 24,000 depreciation was coming to 96,000, but he has taken over the asset for 84,000. So, there is a loss. What is the amount of loss? Minus 84,000. So, it will be 12,000 loss. So, the profit and loss account debited 12,000 to asset account 12,000. In this way, the asset account you will see when we will be preparing the ledger accounts will automatically be closed by this entry 12,000. So, here the loss on default is 12,000. Loss on default, loss on account of the default is 12,000. So, these are the journal entries. Now, let us come to the ledger account. Books of the hire purchaser. So, hire vendor account. And then asset account or motor car here. So, motor car account you can write or asset account. In the first year, let us do the accounts from the very beginning, so that it will be very clear, because only 2 years are there. First year, when the asset was purchased, hire vendor must have been credited, asset account must have been debited. In the first year, asset account debited to hire vendor. How much was the cost? 1,50,000. So, hire vendor account in the first year was created by asset account 1,50,000. Then the down payment was made. So, to bank it was 30,000. At the end of the year, there is an interest on 1,20,000 at the rate of 5%, which is coming to 6,000. So, year end by interest 6,000. And what we paid? He has paid to bank. If this was the down payment, it was the first installment. How much? Now, each time he is giving 1,20,000 divided by 3, that is 40,000 plus 6,000 towards the interest. So, 46,000. Therefore, to balance carried down at the end of the first year, it is coming to 0.80. So, in the second year beginning, it is coming to buy balance brought down 80,000. Similarly, coming to the asset account, it was purchased for 1,50,000 at the beginning of the first year. So, at the end of the first year, depreciation must have been charged. By depreciation at the rate of 20% means 30,000. So, by balance carried down, $1,50,000 here, 1,50,000, 1,20,000. In the beginning of the second year, it is brought forward, two balance brought down, 1,20,000. So, we have done the first year's entries and the ledger postings. Now, come to the second year. In the second year, as usual, interest and depreciation entries will be passed. So, the entry for interest is interest account debited to hire vendor account. Interest account debited to hire vendor means we are not doing the interest account, but hire vendor account we are maintaining. So, hire vendor account is getting credited by interest account 4,000 by interest 4,000. Then coming to depreciation, the entry is depreciation account debited to asset. Similarly, we are not preparing the depreciation account, but asset account we are preparing, and asset account is credited by depreciation 24,000. By depreciation 24,000. We have passed the usual two entries. Now, the defaulting on the defaulting date, that is on 31st December of the second year, he is taking away the goods. So, the entry will be hire vendor account debited to asset account. With what amount? With the amount standing as a balance due to hire vendor. What is the amount standing? 84,000. 80,000 towards the principal and 4,000 towards the current year's interest, total 84,000. So, he is taking away the car to asset at 84,000. So, his account is closed. But the entry is hire vendor account debited to asset. Hire vendor account debited 84,000 to asset. So, asset account is credited by hire vendor 84,000. Now, out of 1,20,000, this is 84,000. So, profit and loss account debited to asset account. See, this one will close 1,20,000. Whatever difference is there, that is a loss. So, this loss will be by PL account, that is loss on default. How much? If we write 1,20,000 here, here it is 12,000. So, in this way his account and asset account both are closed, because it is a case of complete repossession. In the books of the hire vendor, as usual, the entry for interest will be there, but there is no entry for depreciation, because he does not possess the goods. So, the entry only for interest. So, the first entry will be for the interest. What will be the entry for interest? Interest becomes under number 1 for interest, which we have already calculated that the second year's interest was 4,000. This interest is our income. So, interest account will be credited, and what will be debited? Who will be debited? The hire purchaser account will be debited. So, the entry will be hire purchaser account debited to interest account in this case it will be 4,000. Second one entry will be, now hire purchaser account will be closed. Now he will not give us, he has defaulted. So let us close his account. Whatever balance was there, his account will be closed. Now his balance was 80,000. Now here for interest another 4,000. In this way he has, his balance is showing a debit balance of 84,000. So you need to close his account must be credited with 84,000. So to close his account, to close hire purchaser's account, we are writing to hire purchaser account 84,000. Then who will be debited? We are getting the goods repossessed or repossessed stock account debited. We can write repossessed stock account debited 84,000. Same amount will be debited to repossessed stock account. Repossessed stock is a real account. So debit what comes in. Similarly, we will be writing repossessed stock account debited to hire vendor, hire purchaser, because he is giving away. We are taking away and he is giving away. He is the giver to hire purchaser account. That is the second entry. How much? 84,000 we have already taken. Then when he spent something on its repair and renewal to bring it into a workable condition or sellable condition, some expenses are incurred. So for those expenses, what will be the entry? The entry will be for the expenses, repossessed stock account repossessed stock account debited to bank account. Now we have to go to the question, how much amount has been spent by him? He is telling he spends 5,800 on the car, 5,800. And the fourth entry is for sale of repossessed stock. For sale of the repossessed stock, we can write bank account debited with the sale proceeds. For how much we are selling it? We are selling it for 80,000. 80,000. Then profit and loss account debited if there is loss to repossessed stock account with the balance of the repossessed stock. What is the balance of repossessed stock? It was 84,000 debit, again debited 5,800, total 89,800. 89,800. But we are getting 80,000. That means there is a loss, and the loss is amounting to 9,800. If there would have been profit, instead of writing this line profit and loss account debited, we would have written to profit and loss account within bracket profit, whatever it may be, if it would have been more than 89,800. We will prepare one higher vendor account, higher purchaser account. So, in the first year, when it was sold to the hire purchaser account debited to hire sales account. How much? The balance was 1,50,000. The cost was 1,50,000. Then he has given us down payment by bank 30,000. Then interest was due on him to interest account on 1,20,000 at the rate of 5%, which was 6,000. And he gave us 6,000 towards the interest and 40,000 towards the principal, because 1,20,000 divided by 3 equal installments he was giving. So, 40,000 he must have given. So, we can write by bank, it was the down payment and it was the first installment, 46,000. So, there is a balance of by balance carried down, $1,56,000, 1,56,000. So, the balance was 80,000. Two balance brought down in the second year, 80,000. Then at the end of the year again interest was due. This entry, 2 interest 4,000. We are expecting that he should give us 84,000, but he has defaulted and we are taking away the car, that is 84,000. Entry is repossessed stock account debited, repossessed stock account debited to hire purchaser account, to hire purchaser account 5,800, sorry 84,000. Repossessed stock account debited to hire purchaser account 84,000 means hire purchaser account is created by repossessed stock account 84,000. Now, whatever balance was there, it was closed. Repossessed stock account debited 84,000 and this balance is closed. This account is closed. Now, let us spend something on its repair, that is 5,800. Entry repossessed stock account debited to bank account, to bank account 5,800. So, in this way we expect that if we get 89,800, there will be no profit or no loss if we sell the goods, sell the repossessed stock account for 89,800. But how much it is realizing? It is realizing only 80,000. The entry is repossessed stock account is credited by bank, the sale proceeds 80,000. So, which side is bigger? This side is bigger, 89,800, 89,800. So, by repossessed stock account is credited by PL account or PL account debited to repossessed stock account, that is 9,800. So, this is a loss. When profit and when this repossessed stock account is created, but profit and loss account is debited, that means it is a loss. So, on account of repossession and spending on that, we are running a loss of 9,800. So, this is in short your hire purchase account. In the next class, we will be discussing about the other part of lease etc., but for the time being let us close this one with a recapitulation of this journal entries only at the time of default and repossession. So, when it is completely repossessed, the first entry we have to pass in the books of the hire vendor is for the interest. If you remember, we have already passed the entry for interest and depreciation in the books of the hire purchaser, but in the books of hire vendor there is no need to pass any entry for depreciation, only the interest entry will have to be passed. Whatever amount of interest is due up to the date of default, that will have to be taken into consideration. So, the entry is hire purchaser account debited 4,000 to interest account 4,000. How we have calculated 4,000? Because the amount outstanding to his the hire purchaser is standing to his debit is 80,000. On 80,000 at the rate of 5% interest for the whole year, that is 5% on 80,000 is coming to 4,000. So, this is the entry for 4,000. Then we will be closing this account because he is defaulting and he is not interested to give the amount. So, we will be repossessing the stock or repossessing that car, and his account first of all will be closed and it will be transferred to repossessed stock account. What will be the entry? The entry is repossessed stock account debited, because it is a real account, debit what comes in, repossessed stock account debited. To this 84,000 I shall come later, to hire purchaser account 84,000. Now, hire purchaser account should be closed first, not the repossessed stock account. So, hire purchaser account is standing a debit balance of 84,000. Until and unless we credit him with 84,000, we are not going to close his account. So, his account is closed by repossessed stock account. So, the entry is repossessed stock account debited 84,000 to hire purchaser account 84,000. Okay. Now, the posting is repossessed stock account debited to hire purchaser account 84,000 and hire purchaser account is created by repossessed stock account 84,000. This account is closed. Coming to the repossessed stock account, if we have spent something on its repairs and renewals, here it is coming to 5,800, the entry will be repossessed stock account debited to bank account. So, repossessed stock account debited to bank account 5,800. Now, all total it is coming to 89,800. This is our property. We sell it. We sell it for how much? If we sell it for more than 89,800, then there will be profit. If we sell it for 89,800, there will be no profit, no loss. But if we sell it for less than 89,800, there will be a loss. And what is the amount of sale proceeds? It is only 80,000, less than 89,800. So, there is a loss. So, what is the entry? The entry is bank account debited 80,000, profit and loss account debited 9,800, to repossessed stock account 89,800. So, by bank account 80,000, by profit and loss account 9,800. That means that is the loss we are incurring. So, total in this way is coming 89,800 in the credit side and also 89,800 in the debit side. In this way, this account, that is repossessed stock account, is closed. So, this is all for hire purchase system, and both in the books of the hire purchaser and in the books of the hire vendor. Thank you.